Hey, Jonathan here from NorfolkFXTrade.com, and in today's video I'm going to be showing you how to use that supply and demand confirmation entry. So by the end of this video you're going to be able to apply what you learned in the previous two videos, how to use a confirmation entry with an area of market structure and the use of trends within trends. So as I said in the beginning of this video, this is the third video in this three-part series. This video is going to be all about the use of supply and demand trading confirmation entry with what you've learned in those previous two videos, which was the how to trade trends within trends in Forex trading and that other video on how to use market structure with supply and demand. Now, if you haven't watched those two videos, you really have to go and watch those first. I'll leave links above now so you can go back and watch those two videos. So what I'm going to do first, I'm going to go over to the whiteboard, just demonstrate what the confirmation entry actually is. Now you've learned those previous two videos, I'm sure you've got a good idea of how you're going to use it anyway. Then we'll go over to some price charts and we go through some examples so you can see how you can actually start applying it in your supply and demand trading. The confirmation entry, what is it going to be? Well, now you've learned the trends within trends. We're going to look for a confirmation entry with a 1 hour time frame or even down to a 15-minute time frame within a 1 hour trend. So let's take this as a 1 hour time frame. So on a 1 hour time frame, this is our swing on 1 hour. So this is our move up, pull back and head higher. So we made a higher high and higher low in the trend on a 1 hour time frame. So we know we're already bullish. So we're bullish trend on this pair. Okay, we're in a bullish trend on the 1 hour time frame. Now we're going to look at a 15-minute entry with everything you've now learned in those previous videos. So we know we've got a 15-minute trend going to the upside, it reverses, we pull back, and it's here. When the market gets to this point, we're going to start looking for that reversal. Now obviously you don't know the reversal's coming yet. What you may find is that this happens in an area of previous demand on the 1 hour time frame. Now, of course, you can learn more on that technique with the use of my top-down analysis or the use of multiple time frames in supply and demand. And if you haven't seen either of those videos, they are a great watch and you should go and watch those videos right now, and I'll leave the links above for you to watch them. So what are we going to do here at this point? We're going to mark out our last area of market structure. This is our trend within our trend. On the 15-minute time frame, this is our last area of market structure, our last lower high. So it's our last lower high in the sequence to the downside. We're looking for the market to break to the upside, removing that area, which actually would be a last area of supply as well in the market. And then we're looking for the market to pull back. Now we're either going to look for the market to pull back to an area of demand created, where we'll look for our entry to go long, or you'll look for the market to start making a trend to the upside. And what you'll do here is you'll be marking out your areas of demand as the market goes back up with that 1 hour swing, looking for that set and forget entry. Now again, if you haven't seen the set and forget entry strategy, I will leave a link above now for you to go and watch that video. Now it's going to help you to look for trades with use of a set and forget strategy, which means you'll just be placing your trades with your entry, your stop loss, your targets, and walking away and let the trade do its thing. That's a great way to help with your trading emotions. So that is what we're looking for when it comes to a reversal of our set and forget entry or a confirmation entry. So you now know how to apply a set and forget entry with the use of this reversal, or this will be the area we're looking for our confirmation entry. Now, perhaps you're not sure still on this confirmation entry. So what I'm now going to do, I'm just going to go into that area more close with some candles. Then I'm going to go over to some price charts and we're going to apply everything you've learned on all 3 videos. So we're going to see the market drop down. In fact, no, let me change that. I'm going to do an area of supply because I showed too many times areas of demand. So we have the market rallying up and then we're looking for the trend. This is a lower time frame trend. Looking for a pullback. Then it continues back up. Now obviously trends on the charts you're going to see are never perfect. So you don't expect them to be like this on your charts because they will not be. So this is where we can see that higher low and higher highs. The trend is going up on that 15-minute time frame. And then we're looking for the market to basically drop out. So we want to see the market now from here drop to downside, removing that last area of this area of market structure. In fact, let me just change my pen. So I want to see this area of market structure being removed. Once you've seen this area of market structure removed, this is where we've seen our trend like this on the 15-minute time frame inside that 1 hour area of a swing. Then we're going to see it breaking out, removing this low. What will that create? That will create our area of supply. And this is what it's all about. You're now trading a reversal inside a higher time frame. And that's where you can then look for the market to then pull back. And you're looking for an entry out of this area of supply. Or you look for the market to start continue back down, removing this low, which then you'll be starting to look for a set and forget entry style. So that is exactly how you will look to apply this confirmation entry with the use of market structure and trends within trends in Forex trading. So now let's go over to some price charts and we'll demonstrate exactly how it's all going to come together and allow you to use a confirmation entry or a set and forget strategy entry in your supply and demand trading. So now we're on the charts, we're on the Audi US dollar, the same pair that I went on those previous 2 videos. So you can tie all this together. Now I'm going to go through a same area on the chart we went through on those previous videos. I'm going to go through this pullback here and then we may look at some other pullbacks if we have time by the end of this video. Now I'm going to go through is just quickly to demonstrate how you're going to apply everything together, what you've now learned, and then how to look to trade an area of supply and demand. Now we know this is a last swing up on the daily. And then we have this as our current swing pullback. Now what's important is that you're still using the actual supply and demand technique that you've learned on those other videos. So we know at this point here in the chart, this is going to be an area of what? An area of demand. The market's rallied up, we're pulled back, we're looking for a reversal out of demand. So here you can use a set and forget strategy on a daily time frame, or you can go down to lower time frames within those trends to find a entry with the use of trends within trends, the break of market structure, then confirming with an entry with supply and demand. You'll still be using a set and forget strategy on those lower time frames, but you'll be capturing a much lower risk toward trade. So this area right here is where you'll be looking for that reversal. So if we now go down to a 1 hour, mark off this area, go down to 1 hour, and it's in this area on the 1 hour where we've got this pullback. I'm going to have to go lower. Here we go, we can see it now. Now if I mark out again quickly where we can see this pullback happen, eventually you won't need to actually have the fractals on the chart. I mean, they will help you to start with those, so I do suggest using fractals. But eventually you'll be able to see those swings in the market where the market is making those lower highs and lower lows in this downtrend. So you can see I went straight down there, removing this last low. And these are your areas of market structure. So you can see this is our current swing pattern to the downside. And now we're going to draw off our last area of market structure. This is our last lower high in this sequence, with this trend to downside in this retracement. So it's from this retracement, we're looking for the market now to rally up, to continue up, breaking this area of market structure. When it breaks that area of market structure, that is when you know you've got a valid reversal on that lower time frame. So let's now go into this area and we'll see, just highlight that area and we're going to go closer in. So hopefully you can see this, and the area what breaks is this bullish candle. That is the candle that breaks this area of market structure. And when we see this, you need to understand that we've already come off an area of higher time frame area of demand, which is valid. You need to still draw those zones out. Remember, the use of drawing those zones of supply and demand is crucial to this methodology. Then you can apply your top-down analysis in multiple time frames, understanding what a level is on top of a level. All this in this channel will help you to understand how to trade with supply and demand. When we see this candle closing at this area, now it's validating our break of market structure. And what we can now do is start to mark out our areas of demand. This is our area of demand on the 1 hour. So if the market had come back into here, this is where I'd look for that first reversal for an entry. Look for the market to go back up. Now it didn't happen. So what would you look for next? The next area, what you'd start doing is when we see the market from here, and you can see it starting to make a new swinging pattern to the upside. Now in fact we wouldn't have drawn it like this, but just to show you, this is that last area of market structure. This needs to be broken. And the idea is to still draw these trends so you can see the trending pattern on that time frame when it reverses and breaks that last area of structure. But what you could have just done is also marked it from here straight to that point if you wish. Depends on how you prefer to see those markets. But as the market goes up, this bearish candle right here would have created an area of demand. And you can see what happened is the market came back into that area of demand and you could have caught this entry. Now this happens again. In fact, you could draw from here. I'm going to remove this line so there's no misunderstanding, and the market continues to make these higher highs, higher lows. You have to draw all the zones out. Now it does go lower here, so I'm only going to draw it to that area. Obviously you wouldn't see that in time, but this pullback, there was a pullback here. But I'm just going to draw what we can see at the moment, just so I can show you those areas you want to be drawing. Now as the market goes up, these lows in the market, you can now draw new areas of demand. These are the areas where you're looking for the market to come back. Now it did come back here, rallied up, come back again and rallied out once again. These are the areas where you can place that set and forget entry. And once again, the market here rallies up again. You mark out the next area of demand. What does it do? Again, it pulls back to that area and then the market rallies higher and you continue withdrawing out your swings with your trend. Now you can see it does actually come back to here once again. So you would draw this out as another area of demand. And where does the market come back to from here? Well, even though it does make these smaller swings where you may have had a losing trade. Now, I'm not saying you're going to win on every trade like this, but you're now going with that high time frame with these trends. And the market does pull back and again, off it goes. So that is showing you a typical way of the market going with the trends within trends. Now, the reversal confirmation entry side of it actually comes on the first time you get your entry. So we zoom back out. Zoom out again. So the first time you get this entry off this area of demand, whichever one, that is your confirmation entry. And as it goes higher, you know that you're in a good trade. Now, sometimes you're going to see this even closer. So you'll have this type of break here, last area of market structure, creates an area of demand, and then a pullback, and then rally out. Now that is a perfect typical example of what you want to be capturing. This one wasn't a best example, but it was a current area that I like to show on current price. Still worked out. All depends on what you're looking at. Now, where would you have targeted that trade? You would look to have targeted that trade at this swing point, this high in the market. So if you've taken an entry, I'm going to remove this one because he wasn't taking it. If you're going to take an entry here, even this entry here, you would have still had a 4-to-1 risk to reward. Now, I know it's not a big risk to reward, but you could have taken half off your trade there, and you could have held the rest as it went up, continue to lock in profit. Or you could have looked to target the next high. It's up to you how you look to take those targets, but I'm just giving you the idea of how to find those reversal points using a confirmation entry. So that is the end of this video. I hope you've enjoyed this content. Give me a thumbs up if you have, because it's going to help me to know that you're enjoying this content. And if you're ready to progress with your education, there'll be another video popping up in a moment for you to carry on to the next video.